the markets are doing okay. We wrote in this weekend's newsletter in particular talking about the bull rally continues. That's exactly the case. So here's what you need to know before the bell this morning. Looking at the markets, we've had a very nice rally, certainly still within this context of this uptrend. And, you can kind of see the market sold off a little bit on Friday just over concerns of, kind of this Israel-Iran conflict. Came down, tested the 20-day moving average. That 20-day moving average has been good support for this market. Every time you get pullbacks to the 20-day, that's been a decent point to where markets, start to buy stuff. But regardless of that, markets remain overbought. We are, started on Friday, tried to work off some of that overbought condition. Again, this morning, futures are pointing fairly higher. So again, what little bit of sell-off we had on Friday, maybe that's it for this whole kind of Israel-Iran conflict. Don't know yet. But again, we'll see what happens. There's still, a lot of things are in flux right now. A lot of things can happen. Certainly, if some type of shock comes up over the next couple of days from that conflict, that could certainly impact stocks. But again, as of right now, markets remain on very bullish footing at this point, and there's not been a lot that's been able to deter this bull rally currently, despite all the negative headlines, concerns about tariffs, inflation, whatever it is. This market has been really running contra to that, climbing that wall of worry, so to speak, and that's really been the case here. The one thing is that while retail investors are pretty much fully allocated to the markets, institutional investors still remain very underweight equities. Look at consolidated equity positionings across, kind of across measures of hedge funds, CTAs, etc. They all remain underweight equities. So again, there's this, as this market continues to try to push higher, every one of these little dips, like you saw on Friday, are getting bought by the professionals because they're having to get money allocated to the markets to be in the market. And that's particularly the case as we start to head up towards the end of this month, which is the end of the reporting period for performance for mutual funds, hedge funds, etc. So it's the end of the quarter. So this quarter end will mark their performance mark. They've got to report those earnings and or their performance, and they've got to report their holdings. So over the next 2 weeks, there could be some more buying pressure to the markets of them just trying to get allocated to the markets before the end of the quarter reporting period. That's not a guarantee, but just something worth paying attention to. Because again, with them being so underweight, that's certainly going to weigh on performance as they report out this quarter. Again, for hedge funds, mutual funds, etc., performance is key because everybody tracks their performance and it's like, oh, you didn't perform, I'm going to move my money over here. So there's a lot of what they call career risk to portfolio managers going into the end of the quarter because of potential underperformance. So again, that's going to potentially cause some more upside bias to the markets as they try to get allocated to make sure when they report, they show they have all the right stocks in their portfolios in that reporting period. Other than that, the other kind of big question remains the dollar here. The dollar's been under pressure. We saw a little bit of lift on Friday because of the conflict overseas. We saw some money rotate back into the dollar. But again, the dollar's been trying to base along this bottom here for a while. We're trying to work on setting a double bottom, getting decently oversold here on the dollar. So we're actually getting set up for a pretty decent counter trend rally to the dollar. And right now, there's a ton of negative sentiment on the dollar. So you've got a lot of short positions against the dollar. The short dollar trade is the most overcrowded trade out there right now, which is a really good setup for a counter trend rally to the dollar for whatever reason. Again, it could be ongoing conflict with Israel-Iran. It could be something else entirely, but something will cause a shift back into the U.S. dollar. And then once the dollar starts to rally, you get that short covering coming in. All these people that are offside the dollars have to cover. That gives you a potential decent rally in the dollar to somewhere from 97 up to around 102, 103. That would be a very good rally for the dollar. So there's a decent trade setup for the dollar sitting here right now, especially with it being as oversold as it is at the moment. So again, just kind of paying attention to that. Of course, a rally in the dollar works against potentially some of the kind of the international companies as well, because that strength in the dollar will start to attract foreign inflows back into U.S. assets as well. So rallying the dollar could help benefit the stock market even more kind of near term. Anyway, that's what you need to know before the bell this morning.